U.S. posts devastating jobs report today, August 1st of 2025, and here's what it could mean for you. And before I go into it, my name is Hayato. I manage and own a real estate fund. I've personally done over 250 plus transactions, and with my partners, we've closed more than 1,000 plus deals in the past 10 years. And I want to share this information with you because I take a look at the economy on a daily basis, see what's happening, and I would love to share my insights and my thoughts, and would love to hear your thoughts too in the comments below as well on what you think. So let's just dive right in and talk about what happened with the 2025 July jobs report. So, with this report, it was quite a wake up call. The US economy added 76,000 jobs in July of 2025, which is well below the expectations of over 175,000. And they were saying they should have at least 100,000 jobs added in July 2025, which in this case didn't happen. And unemployment also ticked up from 4.1% to 4.2%, continuing its gradual rise throughout 2025. But that's not the most shocking thing. The biggest thing was the May and June job gains that were revised downwards, and they were revised significantly. So in May, originally it was reported to be 144,000, but it was revised recently down to 19,000. And in June, it was reported as 147,000, but it was revised down to 14,000. And these are not just small revisions, these are massive, significant revisions. And so who knows whether or not the $76,000 jobs in July 2025 is actually accurate. That could be revised down as well. And so that means that even the earlier optimism that we initially saw in the months of May and June were very much overstated. And July could be the same case as well, which is a big wake up call. And so, what sectors are being hit the hardest? And according to the July 2025 report, wholesale trade is down 6,600 jobs. Manufacturing is down 11,000, which is quite shocking, right? Because the whole purpose of the tariffs and taxes that we see on a daily basis and see updates for was so that the manufacturing job growth could be continuously added. However, that's been going down. And professional and business services also lost 14,000 jobs as well. And so the only major sector that added significant jobs was the healthcare industry. I believe it was around the 50,000 job addition rate. And it is trending upwards amid demographic shifts and ongoing demand for medical services. However, leisure and hospitality added 5,000 too, but again, it continues to show weakness compared to prior years. However, again, in the overall big scheme of things, we're seeing a big decline in what we expected the job growth to be. And so let's see what that could look like and why the downward revision. So the Labor Department cited weaker than expected employer surveys and seasonal adjustments, and it was misaligned with current hiring trends. So this revision reflected a cooling labor market where companies are hesitating to expand due to elevated costs and cautious consumer behavior. And what that led to was Trump firing the labor commissioner. And so he fired Dr. Erica, citing incompetence and inconsistent reporting. And what does that mean? It's going to shake up the top of the Labor Department, and it's going to cause heightened scrutiny as we move closer to the 2026 election cycle because he was promising more job growth. And what we're going to see is uh, mounting political pressure on the Fed also to ease interest rates, which begs the question, do you think the Fed is going to decrease the interest rates, or do you think they're going to keep it the same? Leave that in the comments below. I would love to hear your thoughts here as well. Now, in terms of my industry, which is the real estate industry, if I can speak on it a little bit, this is one of the big reasons why I stick to populated, diverse cities like Chicago, because when you invest in cities with diverse economic bases, you can hedge your downside. So if you look at Chicago, it's the third largest population in the US, it has major job sectors, healthcare, logistics, tech, education, advanced manufacturing. And because of those reasons, it allows us to have many people who are still going to be employed and can still pay rent, and that causes high rental demand and steady cash flow from workforce housing as well. And so, if you compare that to cities that are heavily dependent on just the one sector or one industry, if that sector fails, the city suffers greatly too. So, even though the unemployment rates may be quite low in those cities, if one of those industries or one of those giants that feed that population go out, it could significantly impact it. And so that's why I like to personally focus on cash flowing areas with great population size and population growth and as much job diversity as that city can afford, because that's going to be able to keep that market as steady as possible. Although there's always going to be volatility in any city, in any market when big economic shifts like this happen. But it does help you as an investor keep a peace of mind knowing that your city at least has the capacity to fight back whatever is happening in the economy. And it's these core foundations that support and protect your investments. So whenever you look at your investments, that's something that I would encourage. And this is something that we look at as well when we are looking at the next possible deal that we want to go into. So I'm curious, what do you think? Do you think the Feds are going to hold interest rates flat? Are we heading towards a soft landing or something worse? Drop your thoughts in the comments. If this gave you clarity on the economy in 2025, hit like and subscribe for more news and breaking news that can come up. And I will go ahead and see you on the next video. Thanks for watching.